Hi there, Serial Trader here. Let's have a look at the major US indices. And alright, so since the last video on the weekend, we did come down and take out those October lows. And that was at 2603.54. Yesterday we went as low as 2583.23. But certainly not the waterfall collapse I was looking for. But does that mean that the bottom's in and we're good to go? I'm thinking still at this point, no, not likely. At this point, though, we'll have to point out, just to advocate on the bullish side, because I have to look at things from both sides to make a good decision, at least from a trading perspective, right? So at this point, we do have a lower low in price, and yet we have a clear bullish divergence on the MACD moving averages, and we also have a clear bullish divergence on RSI. That is, higher lows on these indicators and obviously a lower low in price. So there's that. But when I actually dig in deeper here and I go to the hourly chart, and I haven't changed my wave count here yet, by the way, we still have this working as a impulsive decline in progress after finishing our 3-wave corrective move up from this initial 5 waves down from September there. But going in on the hourly chart, so I still got a 1, 2, 3, 4, 5 down for probably the first wave of a larger 3. ABC up for 2, and you see that came in at as far as Fibonacci relationships go, that was a, let's see here, I think it was a 50% retracement. Yeah, so that was a 50% retracement of that initial move down. And then we came down again. And now I think we did another 1, 2. So wave 3 is going to be extending. So we should be, if this is the right count, we should be ready to come down in a third of possibly a third wave. So it should be a pretty strong decline if this is the correct interpretation. And we'll find out soon enough. I mean, starting tomorrow, or couldn't be too long after that, the day after that, we should know whether we're going to get that real breakdown or whether there's something else going on here. Now let's just go to the Fibonacci retracement of this leg down. So I think it was fairly deep. Let's see. In between the 618 and the 786, but still an acceptable Fib retracement for a wave 2 of one lesser degree here. Now at this point, expecting to take out that Monday low and in trending fashion, come down in a 3, 4, 5 of the larger 3, and then there'd be a larger 4th wave bounce up, and then that larger 5 for possibly a larger 3 still. So if I was to go out to the daily chart, and let me just get this scaled back the way I want it. Okay, so daily chart. I'll lock it so we can pan around here. So the expectation would be that we're coming down like this, and at least looking for that equality relationship below 2,500, but more likely somewhere closer to that 1618 if it is a third wave. If we do stop at the equality relationship, and that kind of marks a important bottom, and big volume shows up, and we do a V-shaped recovery, and bullish candlesticks and all that, maybe that will be just a wave C down, and we're ready to go off to the races again in somehow another impulse wave to the upside. Although I still view that as a lower probability scenario. Definitely still favoring this being a third wave down of a larger 5-wave sequence in progress. So that's still my roadmap as far as what to expect from current levels here. But at this point, let's go back to the hourly chart. At this point, for current short positions or long puts on SPX or SPY, this is the new stop level, I would say, and that's today's high, 2674.35. If you want to have a looser stop, you can still leave that 2708.54, but that's a little too loose for my liking. At this point, if we take out this level and I close my open puts there, I'll still be profitable. So it's kind of a nice, comfortable trade at the moment. Even if it gets stopped out, it's going to be a guaranteed minimum profit by utilizing that resistance level as an exit. But ideally, we just trend down here and get going here on this sequence. But that being said, if we don't, and we just come up again and chop around in this range, then I'll have to get out that triangle labeling again, and we might be in a still longer developing B-wave triangle, as I've shown in past videos. Not ready to go there yet. Still looking for lower prices here, but not going to fight with the market. If it doesn't want to go down, then we have to just accept that something else is going on here. So interesting, bit of a fight for bulls and bears. Certainly you can make certain cases for being bullish here, such as these bullish divergences. Obviously I've made some pretty strong cases for being bearish with the larger and shorter term wave counts. And also, if I go to the candlestick chart, I'll certainly make the case as to why things are still bearish from this perspective. So looking at this, we're still in a clear downtrend. All moving averages are pointing down. All shorter term moving averages are below longer term moving averages. We have our death cross, the 50 going below the 200. That is solidly in place at this point. And we're simply using the daily T line as resistance on these bounce attempts. You'll note that today, we had that bullish hammer yesterday, which definitely was a bullish signal, but it doesn't mean it's a change in trend. It's a buy signal, and we had some bullish action today. So if you bought the market on that bullish hammer, you certainly got some upside today, as long as you actually sold and took some profits. But as you can see, we failed right at the daily T line, came right back down, and actually closed slightly negative for the day. So certainly no bullish follow through to that hammer signal. So that makes me favor a bearish outcome still. Until you can get a candlestick buy signal and a close above the T line, and then start using the T line as support in an uptrend as you pull back to it, have it act as support, basically the opposite of what we've been seeing here, where it acts as resistance. There's really no strong technical reason to be bullish here. And not to say there aren't intraday opportunities in both directions. There certainly are. And in fact, in this environment, some of the best stuff I've been doing is just scalping futures. When you've got intraday ranges like this, I mean, 40, 50, 60 point ranges intraday or more, that is great opportunity when you're, trading S&P futures in either direction, bullish or bearish, because it's just, highly volatile. But that being said, the down moves have some nice flow to them. The up moves, they have some flow to them. Utilizing the 10-minute T-line and the oscillator here, there's certainly decent trades to be had. But the overall trend, and that's what I'm really analyzing here, overall trend certainly still favoring the bears. Okay, so that's SPX. Moving on to the Dow Jones Industrial Average. And the Dow very much in the same boat. Dow had a bullish hammer yesterday. Definitely some follow-through buying today. So it was a nice buy signal for at least a single day of upside. But you can see we failed at the T-line, as we have been doing. Failed at the daily T-line, came down, and the Dow as well closed negative for the day. Didn't quite do a bearish engulfing. We didn't quite close low enough, although it was real close. So the Dow also still looking bearish from that perspective. And the overall pattern, we still have 5 down here on the Dow. We did some sort of 3-wave corrective move, and it looks like we're coming down again to make another 5 down. That is the current outlook. Okay, now we'll go to the Nasdaq Composite. And, okay, Nasdaq. And very much the same story. Nasdaq, not so much of a bullish hammer yesterday. The body was a little too big. So it wasn't really a reversal candlestick, or not a very good one as far as the visuals go. But basically the same story as yesterday. Went down, made new lows, although we didn't make new lows below the November lows, as the Nasdaq actually already beat its November lows, or sorry, already beat its October lows in November, whereas the other two indices didn't. But we still made lows above the Nasdaq's October lows, just not November yet. So slightly different pattern in that regard from the Nasdaq, but same implication. Still using the daily T line as resistance, and the Nasdaq closed slightly positive for the day, up just over 11 points. But giving back a huge amount of the intraday rally that was seen. So the implication is still that we're looking for lower prices here before we can count this down sequence as complete. It doesn't count as complete yet at this point. Need to see a completed 5 waves down and a real convincing reversal and a close above the T line to embrace any kind of real meaningful upside. That's how I'm currently seeing this. What will change my mind about all these indices? Well, that would be obviously a break of these near-term resistance levels, starting with today's high, and a close above the T line, and we're just not there yet. Okay, now on the Volatility Index Vix, anything worth noting here? Not really. Vix is still trying to have its little breakout. Nothing substantial yet. This 26 area roughly seems to be providing some resistance. But if we really start getting going to the downside on the indices, VIX should cooperate and trend up here. And the first sign of that would be breaking these 26 resistance area here. And then after that would be, basically 28 and close to 29. But this would be a good first step, getting above these two resistance spikes right around 26. All right, so other than that, there's not a whole lot to mention about on the VIX. And I guess just a little update. I'm working on a. I don't have this dialed in yet, but there's a tool I've been made aware of where you look at VIX versus VVIX. So this is the VIX. This is the VIX of the VIX. So basically, this is an index of the implied volatility of options on the VIX itself. And then there's just the VIX, which is the implied volatility of options on SPX, and then there's SPX, which is obviously the index. But what you're looking for is divergences between the VIX and the VVIX in relation to looking for a significant turning point on SPX, whether it be to the upside or the downside. So I don't have this all set up yet, but that's in the works. I just have to adapt the template that I've been introduced to and get familiar with it, and then I'll start probably mentioning it from time to time. But that's just a little preview. Okay, so that's probably good for now. Serial Trader signing off.